Let's break it down. If you zoom out on January 2026, something quietly significant happened. Not with tanks or treaties, but with airline tickets. Within weeks, multiple US treaty allies sent top leaders to Beijing. South Korea in early January, Canada mid-month, Finland late January, and the UK right at the end. And now we're hearing Germany's chancellor is expected in China later in February. When several countries that normally coordinate closely with Washington all choose the same destination at the same time, it's rarely a coincidence. It's usually a signal that the risk environment has changed and they're adjusting. Now, after that hook, I'm Imran, a Middle East-based analyst. And today we're going to unpack what actually happened, why it matters, what the incentives are on all sides, the realistic scenarios from here, and the signals you should watch next. First, the setup. For most of the last decade, Western allies tried some version of cautious China policy. Cooperate on trade where possible, restrict sensitive tech, and coordinate politically, especially after shocks like COVID, Russia-Ukraine, and supply chain disruptions. But in the last year, a second shock hit. Allies started pricing in that Washington itself can become a source of volatility, mainly through tariffs and unpredictable pressure tactics. When that happens, countries don't switch sides overnight. They hedge, they diversify, they reduce dependence on any single power. Now, what happened specifically? South Korea's president went to China in early January, right in the shadow of North Korea's continued missile activity, and brought a very large business delegation. The message wasn't, we're leaving the US. The message was, we need working channels with Beijing because it affects our economy, tourism, supply chains, and North Korea. Then Canada's Prime Minister visited China mid-January and leaned hard into a very blunt framing, that Beijing can look more predictable than Washington on trade, especially when tariff threats start flying. At the same time, Canada pursued a concrete trade rebalancing approach. Ease friction in one area, seek better access in another, and try to protect its exporters. Late in the month, Finland's Prime Minister went to Beijing. Finland is a NATO member with serious security concerns about Russia, but it still sees value in keeping China communication open, especially on big global files like Ukraine, Arctic issues, and economics. And then the UK Prime Minister went to Beijing and openly pitched a reset built around practical wins, market access, investment signals, travel and business facilitation, while also trying to keep national security guardrails intact. What made this diplomatic cluster explode into a bigger story was Washington's reaction. President Trump publicly described deeper business with China as very dangerous, and his criticism quickly shifted toward Canada as well. On the Canada track, Trump also floated an extreme tariff threat tied to a possible Canada-China deal. So now we have the real question. What's driving this? It's incentives, not romance. For U.S. allies, the incentive is risk management. They're looking at a world where China is too big to ignore economically. Security still leans heavily toward the U.S. Trade policy volatility from Washington can directly hit their domestic jobs and inflation. So they're trying to build optionality, not because they love China, but because they don't want to be trapped. For China, the incentive is to break the appearance of a unified Western front. Beijing doesn't need every country to choose China. It just needs enough countries to say, we're not joining blanket containment. If that happens, China gains room to breathe economically and diplomatically, and it makes sanctions, export controls, and coordinated pressure much harder to sustain. For Trump's administration, the incentive is leverage through disruption. Tariffs and threats can force short-term concessions, but they can also trigger longer-term behavior changes, where partners quietly build alternatives so they're less exposed next time. So here are the scenarios, and this is where people overreact. Scenario 1, managed hedging. Allies keep security alignment with the US, but expand economic engagement with China in selective areas. They tighten domestic security controls on sensitive sectors, telecom, data, critical infrastructure, while still doing trade and investment in lower risk categories. This is the most likely path. Scenario 2, alliance friction hardens. If Washington turns warnings into repeated punitive measures, tariffs, restrictions, choose-a-side messaging, allies will get more serious about autonomy. Not anti-American autonomy, just we need backup options autonomy. Over time, that weakens the coordination that used to be America's superpower advantage. Scenario 3. China overplays it. Beijing could interpret this moment as a green light and push too aggressively, coercive trade tools, political influence operations, or demands that allies soften positions on human rights and security. If that happens, the hedging could snap back into pushback. So China has an incentive to look calm, stable, and businesslike, even if the underlying rivalry continues. Now, what should you watch next? 1. The follow-through, not the photo ops. Do these visits produce real implementation, actual policy changes, actual market access, actual travel and business facilitation? Or do they fade once the headlines move on? 2. The US response mechanism. Does Washington treat this as normal allied hedging, or does it escalate and punish? The more punitive it gets, the more it accelerates hedging. 3. Europe's next moves. If Germany's chancellor goes to China later in February, watch the framing. Is it we're aligning with China, or is it we're protecting our interests in a multipolar world? That language tells you how deep the shift is. 4. The security boundary. The real test isn't meetings. It's whether allies draw hard lines on sensitive technology, defense-adjacent industries, and critical infrastructure while still pursuing economic ties. Here's the takeaway. This isn't a sudden collapse of US alliances. It's something slower. An erosion of the automatic reflex to align because partners are now optimizing for resilience in a world where both superpowers can be sources of risk. And the uncomfortable truth is, the strongest alliances aren't held together by pressure, they're held together by trust and predictability. If allies stop believing they can forecast Washington's next move, they'll keep building options, and Beijing benefits from that even without winning a single big confrontation. If this breakdown helped, hit like, subscribe, and share it. It seriously helps the channel. And comment your view. Is this smart hedging by US allies, or the start of a deeper realignment that's going to be hard to reverse?